Hi, I'm Andy Hart. I'm the CEO and one of the founders of Delegate Advisors, and I'm here today with Ben Thompson, our Chief Investment Officer. Ben, welcome.
Thanks, Andy. Glad to be here.
It's good to have you today, and I'm looking forward to having a conversation today about how your experience over the last 30 years has informed your decisions and how you think about guiding the investment process for our clients.
It's a great question. And, sort of stepping back, when I think about the last 30, 40 years, you think about there are probably five areas I'd touch on. One, obviously, technology. Technology has changed the way we live, it's changed the way we work, it's changed the way we receive information. But it's not just the tools we use. The technology companies themselves have changed the global marketplace. So, the technology, whether we remember the early Web 1, the precursor to Web 1.0. Now we're entering Web 3, right? And this is it's a brave new world. The abilities that we'll have to interact with technology are things we couldn't have conceived of 20 years ago. And so the way clients are impacted, the way we work with investment portfolios, the types of things that we're thinking about will change as a result of that and have been. The evolution of the Fed, the Federal Reserve, when, pre sort of long-term capital crisis was a third party in the marketplace that acted, in a way that was enigmatic. And over the last 25 years, the Fed has become a closer partner to the marketplace, more sensitive to capital markets activity and more reactive to valuations. The impact of the crises. So if we think from long-term capital in the Thai baht crisis in the 90s to the internet bubble bursting in the early 2000s to the global financial crisis ultimately, not only have they changed the way we invest, the way we manage risk, but also the way we're regulated. So the regulatory regime has evolved. So the marketplace that we work in today is quite different than it was 30 years ago. Also the migration of capital from public to private markets. So the private equities existed really forever, but never been used quite the way it is today. Private credit, private equity, whether it's venture capital or buyout PE, is far more prevalent in investment portfolios today than it was 20, 30 years ago. And the explosive growth in information, and this is part of the technology story, but it's also the speed, the availability, and the democratization of information. It's just made everything more competitive. So whether it's high frequency trading, from an institutional perspective, whether it's day traders who are active in meme stocks, to professionals sitting, in active portfolio management seats in the fixed income sector. The information available to them is very different than it was 30 years ago. And it creates a degree of challenge and competition that makes it harder. And so it makes the opportunities richer because there's more out there for everyone, but the ability to find those that excel and for those people to continue to excel is that much more challenging.
Yep. Let's talk a little bit about the framework in which you were working before versus that of a multifamily office and how you think about investing today versus what you were doing in the asset manager seat in your past experience?
Sure, no, it's a great question. The asset management industry is built on individual portfolio managers and teams that have expertise in certain areas. So an asset management firm has a suite of strategies that represent the expertise of those teams and those capabilities. And so, whether you're in a strong equity market or a weak equity market or a rising interest rate market or a falling interest rate market, that's your suite of strategies. And so you stay true to your philosophy, but you're always delivering that one sector, that one strategy, or that suite of strategies. In the family office space, in the advisory space, you have a blank sheet of paper. Really, you're looking at the entire investment landscape and finding the best options for your clients. It's dependent upon their objectives, the structure of their plan, the domicile, their tax situation, what their needs are, what their risk tolerance or risk aversion is, and then you can pick across the entire investment landscape the combination of asset classes and sectors and managers and individual portfolios that fits those objectives. So the openness and the ability to really look across the best of class managers in every sector and subsector of the marketplace is quite different from being in a single asset manager seat.
Yeah, I couldn't agree more. I mean, it's one of the challenges that we've had is defining what our clients are going to invest in and then finding the best solutions for them. So we are so excited to have you on the team because we just know that the experience that you've had living in that seat is going to help us make even better decisions for our clients over time. And I can't wait to introduce you to them.
Oh, well, thank you. And actually, it's a terrific team. And I think what I view my role as CIO as really a collector of ideas, having the team, helping the team to facilitate the best outcomes, because I don't claim to have, the solutions. I'm not going to be one.
Really?
Sorry to tell you now. No, I think I've certainly been doing this long enough to know that there's a collective intelligence that no one person has. And having known you for almost 20 years and having worked with your team since the beginning 10 years ago, I have a tremendous amount of respect for the investment capabilities of the team you have right here, and I'm excited to be a part of it.
We are too. So it's great to have you, and we look forward to having many more of these conversations for years to come.
I am as well. Thanks, Eddie.